Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, China's economic shift isn't necessarily bad news for all commodities. Keaton Energy's CEO is concerned about Vaalkrantz's wage talks. And partnerships are put in place to provide rotary kiln skills and support into Africa. New research by Barclays indicates that not all commodities will lose out should China succeed in changing its growth model from one based on resources-intensive infrastructure investment towards one supported by higher levels of domestic consumption.
We think, yes, China is changing, but this is going to mean different things for different commodities. And we did a big piece of research looking at the potential changes in Chinese commodity demand if we do move to a more consumption-oriented type of growth. In actual fact, it will be quite positive for some commodities. So, yes, it's true that the commodities that are used in heavy industrial infrastructure investment, things like steel, zinc and copper, their intensity of use probably will decline over the next 4 or 5 years. But there will be lots of other commodities that do pretty well out of this process.
JSE-listed Keaton Energy CEO Mandy Glad has expressed her concern over possible labour unrest at the company's Vaalkrantz anthracite colliery in KwaZulu-Natal, citing wage negotiations with the National Union of Mine Workers and the Association of Mine Workers and Construction Union.
Wage negotiations are a hot topic at the moment. We have recently entered our negotiations. We are negotiating with both NUM and AMCU at our Vaalkrantz operation, and are finding that the gap this year between what we believe is reasonable and fair, and in fact for us affordable, is significantly greater than it's ever been before. So although we got through last year unscathed, I am a little concerned that this year it might not be as, it may result in job losses.
South African mining, smelting and processing service company Dickinson Group has created an array of partnerships with several South African and international companies to provide skills and support for mines, cement and lime producers throughout Africa, says Dickinson Group CEO Trevor Dickinson.
We're a furnace construction company and have been for the last 100 years, and we've identified the growth market being the African continent and very much specifically in the cement industry. Cement is required for new infrastructure, and I think you're all reading lots of articles about the African growth, more so outside of South Africa than in South Africa. And what our company have done is we established a defined strategy to expand into Africa, but in order to do that we've had to establish cooperations and alliances. And what I did as the CEO of our company over the last couple of years is selected key strategic partners that would add value collectively to our products and services.
For mining news as it breaks, stay logged onto miningweekly.com and register for our free daily newsletter.